premise seems to be that regulation is bad for crypto or it's scary for crypto. Truth is, we're in a transition point.
We need to enable all countries to step up development cooperation with shared benefits by all.
By the end of this week, we'll have reached the mark of 160 million fully vaccinated Americans.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Closing the loophole, Chinese regulators plan rule changes allowing them to block domestic companies from listing overseas. The country's tech shares sink. Growth concerns. U.S. yields hit their lowest in 4 months, and stocks snap a 7-day winning streak as traders turn wary of the impact of the Delta variant. Fed minutes are due later today. And Bloomberg has learned that Russian government hackers known as Cozy Bear breached the computer systems of the Republican National Committee last week, while the RNC says no data was stolen. So let's get straight to our top story. And Chinese regulators are planning rule changes that would allow them to block a Chinese company from listing overseas. That could be even if the unit selling shares is incorporated outside China. Now, it's the first indication of what Beijing will implement a new tech crackdown announced yesterday. The move is rippling through markets. Now, the Hang Seng Tech Index has been hit hard by the industry crackdown, slumping more than 30% since its February high. Well, joining us now is Bloomberg's executive editor for Greater China, John Liu. John, thank you so much for joining us. I mean, this is a massive deal, and every day it seems to be getting worse, I guess, for Chinese companies. Can they survive, or can they grow as much without listing overseas?
I think the point of these changes in regulation is not to kill or to totally undermine China's tech industry. It's in Beijing's interest to have a vibrant, innovative tech industry, especially with tensions the way they're running with the U.S. China needs new inventions, new technologies, 5G, AI, semiconductors, and it's only going to have that if companies such as Didi have some sort of access to fundraising. I think what we're seeing now is the government wanting to make sure it has enough control over what those companies do with their data, what they do with their businesses, what they do in terms of sharing with other governments.
So do they just need to get approval, John, first, then before they, list overseas? Like, how much more will we know about the details of what can be listed, what can't be listed, and also the relationship that the authorities have with some of these big tech giants in China?
So I think we're moving from a world in which there was little to no regulation of how Chinese companies listed overseas into one where there is substantial regulation. And so I think that doesn't preclude Chinese companies from listing in the U.S. It will, though, necessarily make it much harder. And it will be harder because those companies will now have to make sure they meet Beijing's requirements. So in the example of Didi, it would seem that if they had been operating under this new regime, they would have had to show Beijing that they met the needs for data security before they could have listed in the U.S. And so I think the net result is you'll see more Chinese names listing in Shanghai and Hong Kong instead.
So, John, this is basically, additional oversight from Chinese authorities on some of the tech companies. But what exactly is their biggest concern here? As you say, they do want, a vibrant kind of technology-driven economy as well.
So I think data is really at the heart of a lot of this tension, a lot of what's happening now. You have the U.S. and China both realizing how important data is for the economy at large and realizing that they don't really have a good grasp over who has access to data from their countries. So you have Washington doing this review of companies like TikTok, whether those operations in America are exposing the data of American citizens to the Chinese government. And now you have China trying to find out if the data that Didi has on where people are traveling day in and day out in places like Beijing and Shanghai, if that's going to be accessible by people in the U.S., by the U.S. government potentially.
Thank you so much. Bloomberg's executive editor for Greater China there, John Liu, with the very latest on this story. Now, joining us to talk about China, to talk about the world economy, is Christian Keller. He's head of economics research at Barclays. Christian, great to have you on the program. Thank you so much for coming on. We were just speaking with our editor of Greater China to try and figure out exactly what the end game for these technology companies in China was. Is there a read across into your world of economics? Does it mean that actually the relationship between the U.S. and China could be even more fraught?
think the market has to deal with the fact that, probably as early as 2018 was when Trump, started the so-called trade war with China. The relationship now in the next decade or so will be different than it was in the last 10, 20 years. So that's, I think, something the market has already realized. And what we see now, I think that has been accelerated probably with COVID. Both, the US and China, and by the way, Europe as well. Everyone seems to be trying to get more control around, foreign investments, more control about what companies do, and in particular, of course, data. All digital companies, everything that has to do with data. I think there's the desire to gain more control. At the same time, I think everyone still wants growth, and everyone knows that this sector is important and needs finance. So I think what your previous speaker said makes a lot of sense, that there's a desire for more control, but it's unlikely that governments will go as far as really starve these sectors, from financing. So it's probably a lot of posturing. In the end, there's a strong interest on all sides really to continue to have this sector develop.
Christian, does it change in any way? I don't know if it's your forecast on China or actually how you view some of the policy decisions in China. So we had some PMIs that were not as good as expected. We see also a crackdown and concerns about defaults in China.
I think independently of what we saw today about the latest policy actions, what we do see is in China, if you want a carefully engineered slowdown, and China obviously came out of this entire pandemic much earlier, much stronger and better than the rest of the world. They have a credit cycle, which is very important, and that credit impulse that they create already started to peak last fall, and has been coming down. It's actually negative the way we measure it. And that means that China's probably, a quarter to 2 quarters ahead of the world. They've been slowing sequentially. We noted that also the Chinese consumption is not coming back as strongly. That may have to do with credit, but also a little bit with that the variants are not that under control as well. So there's still a reluctance in a way by Chinese consumer maybe to act as they did before. That all we see now in global data, in particular when it comes to manufacturing, we see it in German data, countries that export a lot to China. That is going on, but it seems to be still well controlled by China. So we're not too worried about it, but we certainly know that it is a slowing impulse now coming from the Chinese economy on the global economy.
Christian, overall, what do you worry about the world economy? So we'll have you forecast shortly. Yesterday, we saw a move in treasuries because, as you say, some of the concerns out there. I mean, it could be the China crackdown on technology. It's also the variants. It's also, what's happening, frankly, with OPEC Plus and the price of oil. Is there something that makes you feel uneasy that we've been too optimistic about the world recovery?
I think on growth, I'm not as concerned. I mean, the market very much focuses on second derivatives. And we said in China already, we probably at the peak in growth momentum end of last year. And what we're seeing increasingly now, and I think the market in the US, in particular in Treasury, has been reacting to this, is that the second derivative in the US has been now surprising on the downside. And we realize this is now the peak in the second quarter. And from here on, things going to slow, however, at a very high level. So we think U.S. growth continues to be quite strong, but markets obviously, they always look at inflection points, and we have reached that inflection point. I think oil is a concern. The fact that we have now an increase in demand, obviously, in particular as the transportation sector opens up. And at the same time, we have these difficulties in OPEC to come to an agreement. That means, there's a risk to further upside on oil. And, that has effects on inflation, but also on growth, in particular in the US, where it immediately, transits into pump prices. So I think this is the market, how the market views it. This is why there has been the reaction. However, if I take a step back, I wouldn't be overly concerned. We think this recovery continues to be quite strong, but it's no longer the Goldilocks as before, where everything was accelerating and monetary policy stimulus seemed to be endless.
Christian, thanks so much. Christian Keller there from Barclays stays with us. We'll talk a lot more about this recovery. We'll also talk about inflation concerns, and we'll talk about the ECB review, maybe due this week. Coming up, Treasury yields slide as investors start to show concern about the pandemic recovery. We discuss that more with Christian Keller and also look ahead to the Fed minutes. This is Bloomberg. Economics, final, politics. This is finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua in London. I was thinking of the football, the final of the football. So it's a Freudian slip, Leanne. Save me with the Bloomberg First Word News.
I think you and the whole country are thinking of that football final there, Francine. But in the news, Bloomberg has been told Russian government hackers breached the computer systems of the Republican National Committee last week. Sources say they were part of a group known as APT-29 or Cozy Bear, which has been tied to the Kremlin's Foreign Intelligence Service. An RNC spokesman denied its systems were breached or any information stolen. Now, Brooklyn Borough President Eric Adams has won the Democratic primary for mayor of New York City. The Associated Press called the race for Adams with 50.5% of the vote, edging out Catherine Garcia on 49.5%. The primary was the first time the city has used ranked choice of voting. Adams is a favorite to win November's general election over the Republican nominee Curtis Sliwa. Virgin Atlantic and British Airways say they will test a COVID vaccine verification system on some passengers arriving in London's Heathrow Airport. The aim is to prove that airlines can check passengers' vaccine status before they reach border control queues. Chinese President Li Keqiang is calling for deeper cooperation with the UK to boost relations between the two nations as political tensions do simmer. At a virtual meeting with more than 30 British business leaders, Li pledged that China will continue to open up its economy to the world and treat foreign companies equally. And as Francine was just thinking earlier, Italy will play in Sunday's final of the Euro 2020 Championship after beating Spain at Wembley last night in an entertaining semi-final. Roberto Mancini's Italy won 4-2 on penalties to continue their run of wins, now at 13 games. Fears of a half-empty stadium in London did prove unfounded, with supporters from both sides snapping up tickets. Wembley is likely to be even noisier this evening as England, of course, play Denmark. England is hoping to secure a place in a first major final since 1966. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, I've heard actually of kids being able to be dropped off at school later tomorrow because of the game tonight. I have to stop showing off. I've been sent a message by the team saying, please stop showing off because Italy's in the final. I will stop it now. So I'll talk about the markets instead. Briefly, Treasuries holding on to a rally this morning as concerns grow around the economic recovery from the pandemic. 10-year yields hit February lows in U.S. hours after slower than expected service sector growth. Now, this morning, fears over the spread of the Delta variant among unvaccinated pockets of the population continue to weigh on investors' minds. Traders also looking ahead to today's Federal Reserve minutes for more clues on when the central bank will begin tapering asset purchases. Now, still with us, Christian Keller from Barclays. Christian, I will ask you about football, but not straight away. When you look at treasuries in general, I feel like we were worrying about inflation. And suddenly, in the last 2 weeks, we worried about it less. Is this groupthink by the markets, or is there really some underlying concern that we'll have runaway inflation?
Yeah, it is quite an interesting shift. How we went from really being concerned about inflation. The FOMC suddenly in June telling us that they're thinking about inflation risks, and now the market actually within a relatively short period had shifted again to growth risks. Obviously, on the data that we've been seeing, which is, as I said, it's second derivatives. It's meaning the momentum is slowing, but even the ISM services data yesterday, which you referred to, it's still a fairly high number. So it's a sector robustly expanding. So, I'm not saying the market is wrong here, but I would say it is a market reacting to high frequency news. I think if one steps back, we are less concerned really about growth continuing to be quite robust. And I would say that on the inflation side, there are some risks when you look at oil, et cetera. So I think the market needs to balance these.
Christian, we're also expecting this ECB review. I mean, this is the first time in 2 decades that we'll have a comprehensive review. I guess one of the most, the juiciest pieces for the markets is what they'll do with inflation. What exactly, how do you see it changing, and what does it mean for the markets?
Yeah, there's several things to discuss, and it's the inflation target I think is at the core. I think it's widely expected that they take out the language, close to but below. And that is something they introduced in 2003 at the last strategic review or strategy review, because before it was below 2%. So they decided then to move it to below but close to 2%. And we think that language now will fall, and it will be just 2%. And there will probably be an emphasis on symmetry around that target, meaning if one has undershot 2% for a while, one may overshoot as well. They are unlikely to go as far as the Fed, talking about an averaging inflation targeting, where explicitly one would make up, so to say, for past below target inflation. But we think that's where they settle, 2% inflation, emphasis on symmetry. That would be already a dovish tilt in a way of the new strategy review. But it's also largely expected. I think if they don't do it, market would be disappointed.
Christian, are we even going to have any traders in London tomorrow after the game today? I know I'm trying to find a way of speaking about football that's kind of related to the market, or I'm just going to ask you who you support maybe.
Well, first of all, on the traders, it's interesting because, there are a lot of Italian traders and there are a lot of English traders. So I guess it'll be interesting who is in a better mood. Italian traders, that is on. I'm already anticipating Sunday, but I shouldn't maybe be too early to anticipate that England goes through. But I think England has very good chances, obviously, to go through tonight. And then hopefully we see some great football on Sunday as well.
Christian, honestly, I think certainly all of the newsroom, but I think all of England thinks that they're already in the final. So good luck to them tonight. And thank you so much for joining us. Christian Keller, their head of economics research at Barclays. Now, coming up, just weeks after Nomura vowed to push ahead with its global ambitions, the firm is pulling the plug on a chunk of its hedge fund business. We'll bring you that story next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, after pushing ahead with its global ambitions, despite the fallout from the Archegos scandal, Japan's Nomura is suddenly pulling back. Now, the firm is abandoning its cash prime brokerage services in the US and Europe, giving some clients just 6 months to find a new provider. Well, joining us now with the latest is Steve Ahrens. He's Bloomberg's bank reporter in Frankfurt, who, of course, broke part of the story as well. So, Steve, good morning to you. What exactly is Nomura cutting, and why are they doing it now?
So we're looking at, significant cuts to the prime brokerage business. So the business catering to hedge funds in the US and in Europe, and that's where most of the Archegos hit happened. Remember back in late March and April when all the news about Archegos was happening, Nomura was one of the banks most affected by this after Credit Suisse only. And so now we're seeing the ramifications of that percolating through the business, and they decided to, apply those cuts.
So, Steve, how much is this a setback actually for Nomura's global aspirations?
Well, as we know, Nomura has been trying for a long time to be on equal footing, or at least catch up with the bigger rivals in the U.S. and also in Europe. And of course, turning back now on the plan to have cash prime brokerage expansion in the U.S. and also in Europe, that's a setback. If you want to expand and then you make that kind of U-turn after those heavy losses from Archegos, that is a setback. But as we say in the story, the whole business, cash prime brokerage, is just a small part of the overall markets business of Nomura. So in terms of earnings, it's unlikely to have a very severe impact.
At the same time, Wise has a direct listing in London today. What does this mean for London's ambitions to do a tech hub in Europe? I mean, it's a little bit of a different kind of IPO, Steve.
Yeah, it's not even an IPO, it's a direct listing. So they're essentially telling investment banks, we don't need you. We're just going to sell the shares to, the people who ever want to buy them. That's, of course, a risk. If you don't have underwriters for an IPO, then, it could go wrong if you don't find buyers for the shares. So we'll see. I mean, we're really excited to see what's going to happen to the share price once it starts trading. But if it actually becomes a successful listing, then I do think it will be a boon for London, which, as we know, is trying to catch up up with other IPO places. And so a positive trading start for Wise would certainly be a very positive for London here.
Steve, thank you so much. Steve Ahrens, our Bloomberg's banks reporter in Frankfurt, joining us today. Now, coming up, the European Union has proposed a slate of new rules to bring the world of finance in line with its ambitious goals to make the bloc carbon neutral by 2050. We discuss next with the MEP Anna Michelle Asimakopoulou. Before that, we also speak to our Maria today to really try and understand some of the taxonomy, some of the things that we're doing in green finance. This is Bloomberg. Closing the loophole, Chinese regulators plan rule changes allowing them to block domestic companies from listing overseas. The country's tech shares sink. Growth concerns. U.S. yields hit their lowest in 4 months, and stocks snap a 7-day winning streak as traders turn wary of the impact of the Delta variant. Fed minutes are due later today. And Bloomberg has learned that Russian government hackers known as Cozy Bear breached the computer systems of the Republican National Committee last week, while the RNC says no data was stolen. Good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance Early Edition on Wednesday, the 7th of July. Now, the EU has set out a green bond standard and tighter measures on banks to better reflect the risks climate change poses to the financial system. The aim is really to bring the world of finance in line with its ambitious goals to make the region carbon neutral by 2050.
This will help to fight greenwashing, recognize bonds that truly represent a sustainable investment, and ensure the integrity of this market. Demand now outstrips supply, and many companies and governments want to issue climate and environmentally friendly debt.
About half of global issuance last year took place in the European Union, and about half of green bonds are denominated in euros, making it the most popular currency for green bonds.
Now, for more, Bloomberg's Maria Tadeo is in Brussels for us. So first of all, Maria, what is the EU trying to achieve when it comes to green financing?
Well, Francine, they say this is a new type of financing for a much greener economy. But, to answer your question, there's two elements to this. One is the European Union is clearly now trying to scale up the market for green bonds. They have to issue about 150 billion euros from next year until 2026. 30% of that will have to be in green bonds. Of course, they want to make this as liquid and as big as possible. And then the other one is that we're seeing a huge global competition for the green space. And the Europeans do believe that if they're able to legislate and get this done before anyone else and do it quicker and actually show that the risk of greenwashing has gone away for European green bonds, then that would mean they will be able to dominate the market. Now, if you take a look at 2020, you see that half of the issuance that was put into the green space was actually done in euros. So the Europeans do feel that this is an area where they really want to dominate going forward.
Maria, who will actually issue these and what products exactly?
Yes, and then, Francine, that's also interesting because yesterday the European Union made it clear that both EU issuers but also non-EU issuers will be able to issue European green bonds. They also say that this is really marketed for everyone, financial companies, non-financial companies, also public institutions and governments. What is also key is this element of European green bond standards, which they believe will become the gold standard of green emissions. Now, essentially what it does is that companies and anyone that's issuing this debt will be able to submit, albeit voluntarily, information on their bonds and their products that they're putting out there. So essentially the thinking here is that the more transparent you make this, that removes the risk of greenwashing, and that would entice more investors to buy products that are issued in the green space in the European Union.
All right, Maria, thank you so much. Our Maria Tadeo. I don't want to speak about the football because I know it was a big loss for you, Maria, because you're from Spain.
No, Francine, no. You played well, but Francine, that Spain played better. You know it.
Yes, it was the first time in the tournament, though, that Spain did play well. So, I don't know, Maria. We'll talk it offline.
Very good for 90 minutes.
Talk about this. Yeah, for 90 minutes they played well, Spain. Thank you so much, our Maria Tadeo there in Brussels. Leanne Gerrans also sent me this amazing fact that I need to say before we get to our wonderful guest. England fans, listen to this, are expected to buy more than 50,000 pints a minute of beer during tonight's semifinal. So that's quite incredible figure. That's Bloomberg Size and Scope for football and beer drinking. Now, joining us not to talk about football, but to talk about much more important things, if there is anything that's more important today than football, which is digital, but also green financing and everything to do with trade, is Anna Michelle Asimakopoulou, a member of the European People's Party at the European Parliament. She's vice chair of the Committee on International Trade, as well as being a member for other committees on development and AI in a digital age. She's, of course, from Greece. And Anna Michelle, you've been wonderful through the years in making us wiser on the Commission's thinking about some of these important issues. Anna Michelle, first of all, thank you so much for joining us. When you look at green financing and exactly what will need to be there, it seems that the EU is taking the lead, spearheading all of the global efforts for finance in green bonds. Can we avoid greenwashing? I know you've written extensively about this.
Right. Thank you, Francine. And as you're gloating, I'll just say congratulations and good luck on the making a comment for the football. Yes, it's right. It's true that the EU is really now trying to use what's called the Brussels effect, that is legislate standards that then de facto become gold standards across the world. It's done this very successfully on a number of issues in the past, like the GDPR, for example. It's trying to do it now with its Artificial Intelligence Act. So I think that, the bottom line, Francine, is that we need a lot of money to achieve these targets for 2050 and even for 2030. I think the estimate is we need something like $500 billion additional investment every year for the next 10 years in order to meet the targets that the EU has set. So if we're going to attract this capital and we need private investment, what we definitely have to do is provide the standards, make the rules. And the EU wants to win this game, if you make the rules, then you have greater chances of winning the games. The EU also wants to achieve what it calls its own strategic autonomy. And this has a lot to do with digital. It has a lot to do with energy. And so to achieve this sustainability, the EU is putting forth these rules today. And I think that it's going to make a big difference and make things much more clearer, give us a level playing field and attract the funds that are necessary. So we all favor this in the Parliament. Also, this is going to come through us in the next few months. We see this as a positive step. We see this as a good thing to avoid greenwashing, to have transparency, and ultimately to help us achieve our very ambitious goals in 2030 and 2050.
Do you see actually private investment coming into the right places? So if we look at digital, Anna Michelle, and one of the stories that we've been talking about nonstop for the last 2 to 3 days is the fact that, for example, China is cracking down on some of their Chinese technology companies because they're worried about data. Is there an opportunity maybe for Europe to do that bridge with China if they're, freezing out the US?
Yeah, well, I think that, we made an investment in our transatlantic relationship at the EU summit and started this Trade and Tech Council, which I'm very pleased that this work is going to go forward, because I think that like-minded partners who have the same concept of democracy and who have the same values should work together on all these ambitious issues. At the moment, things with China and the KAI are frozen, and that's because we can't go forward while there are sanctions on parliamentarians at the European Parliament and on other EU officials. This just can't move forward. We need to realign our relationship, and we need to build more trust. They're an important trading partner, but we also call China a systemic rival. They have different concept of what is acceptable in the digital realm with respect to data, and therefore we need to move forward treading very carefully when it comes to this relationship.
And Michelle, you understand AI, maybe, certainly more than most people, but also certainly more than most people also in power. Are we underestimating the impact that the AI could have on jobs? So is there are you taking away some jobs because of AI, but we're creating them with green finance and climate change? Or how does that work? Are we under or overestimating the impact of AI on our daily lives?
I don't think it's possible to underestimate it. This is just going to be permeate everything in our lives. So I think that most policymakers now have their head around it, and I think that people are starting to come to terms with it. But like every other technology, it's what you make of it, Francine, and that's why the approach that the European Union is taking is what we call human-centric. I mean, it's, technology is supposed to make our life better. It's not supposed to be a dangerous thing. So we're taking this risk-based approach in our AI legislation. It's definitely time to regulate artificial intelligence. And again, this has to be done on a global basis. And who should the EU be doing this with? Again, it's a transatlantic thing. It's with like-minded partners who have the same core values and who have the same concept and want to see democracy reborn into democracy 2.0. I'm Greek, and in Greece now we, in the midst of the pandemic, the Kyriakos Mitsotakis' government has made leaps and bounds in digital transformation. And democracy is at the core of our values. So along with Greece 2.0, we're championing democracy 2.0 across the world. And I think this should be the binding factor in any technological progress that takes place from now on.
Yeah, and it's amazing. I should actually see how, from where Greece was to where it's now in a couple of years. On trade, do you worry about supply chains? Everyone's worrying about supply chains, but will it last longer than even what we're talking about now? I know you're on various committees looking at trade and actually how the EU can deal with that.
And so they should be worried about supply chains. I mean, Francine, we saw during the pandemic that we had some very dangerous dependencies. And that's why we're now championing this open strategic autonomy. I mean, we want to, in the EU, continue to use our power as one of the largest trading bloc in order to ensure that we have what we need. And this is not about, don't get me wrong, this is not about protectionism. I mean, we know we can't produce everything we need. We have to be open, but we have to have choices and options. This is what diversification means. This is what resilience means. And if we're going to have this dual transition, digital and green, we need, for example, many critical raw materials that at the moment, the truth is, most of them are being produced in China. So we have to, this is why we've made this critical raw materials alliance, an alliance where we're making sure that we have globally what we need at our disposal to reach our goals.
And Michelle, what's your take on Greece right now? So you mentioned the Prime Minister. I mean, it does feel like every single Bloomberg anchor, certainly that's based in the U.S., is currently holidaying in Greece, and that has to be a plus in terms of tourism revenue, because most of them are big spenders. Yeah. But Anna Michelle, are you worried about the cool islands? That's where our crew hangs out. Anna Michelle, do you worry about kind of leaving people behind so that you have a good recovery, that COVID is taken care of, but that some people really still feel left behind?
The Mitsotakis government is a government that has spearheaded reform even during the COVID years with, I was reading today, it's like 197 pieces of legislation that they managed to get through. And Greece is back on track. Greece has gained its credibility internationally. We can actually borrow at rates that are lower than many, many years through the financial crisis. And Kyriakos Mitsotakis is a man with a plan. And his plan is not to leave anybody behind. Our Recovery and Resilience Fund plan, which is called Greece 2.0, really was well received in Brussels. It's well thought out. It's realistic. There's a plan. There's money coming in. We've managed to attract some serious investors in the last couple of years. We're redoing the Greek Riviera. As you know, Microsoft invested here, Pfizer invested here. So I think that I'm optimistic when I look at the future for Greece, and I'm sure that this government will make sure that everything is all inclusive and nobody is left behind.
Anna Michelle Asimakopoulou, thank you so much for joining us today, European Parliament member from Greece. Now, coming up, just days after China's version of Uber pulled off a mammoth IPO in New York, shares in Didi slump after a Chinese tech crackdown. Now, China says it will look into closing the loophole, allowing domestic companies to list abroad. We'll hear more from our interview with the EV maker, Jinpeng. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Shell is to boost returns to investors later this month as its core business gets stronger due to a recovery in energy demand and rising prices. The Anglo-Dutch oil giant says it will raise total distributions to shareholders to between 20 and 30% of cash flow from its operations. It did not specify whether this would be through dividends or share buybacks. Now, the Pentagon has scrapped a $10 billion cloud computing deal with Microsoft after several years of wrangling, with plans to divide the work between Microsoft and rival Amazon. Instead, Amazon had argued in court that political interference from former President Donald Trump has cost the computer company the lucrative cloud contract. Samsung has reported better than expected profit as chip prices and shipments rose on strong server demand. The company said the earnings reflected a one-time gain related to its display business. Analysts say this is likely a payment from Apple for failing to meet contract requirements for screen supplies after iPhone mini sales came in lower than expected. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Xi Jinping fluctuated in its Hong Kong trading debut after becoming the first Chinese electric vehicle maker to finish the so-called homecoming share sale, raising $1.8 billion. Now, Bloomberg's Yvonne Mann spoke to the vice chairman and President Brian Gu.
Well, I think having a listing venue closer to home is always in our strategy. I think as a China consumer brand, I think we want to have our customers ultimately be our shareholders as well. So coming to Hong Kong gives an opportunity to achieve that goal.
Some Chinese companies listed in the U.S., though, are hedging their bets, I guess, or hedging against any kind of possible delisting from U.S. exchanges. And now it seems like there's this newfound pressure from Chinese regulators when it comes to data security, data privacy. To what extent do you think this DD probe is only going to speed up more Chinese companies to come back home and list?
Well, I think overall the regulatory environment is becoming more and more focused on the softer side now. You know, the data side, the privacy side, the national security side. Those were not probably focused as much. But I think it's something we anticipate because we see the global regulatory environment gets tighter and tighter. It's just not in China. The data privacy, data security is a big topic in Europe. That's why we're building up an effort there. In the U.S. too, I think people focus very seriously on these issues. So I think as a company that operates globally, you have to really be prepared to face and to address all these issues and its regulatory oversight.
Let's talk about the competition. Tesla seems to have run into some issues in China, whether it's recalls of nearly all its vehicles in China, the software issues. Does the timing seem right now for XPeng to build your war chest and gain some ground?
Last year, we saw Tesla lowered prices on their product several times, and people asking us, okay, whether that will impact XPeng because we directly compete with Tesla on our models. But the result is actually we both thrived. We both grown quite well and tremendously expanded the pie and market share for China. So I think ultimately having a good competition and will strengthen yourself. And I think Tesla is a tremendously powerful brand. It has great technologies and products. So we think they still continue to kind of do well in China. But whether they will have the dominant share like they had before, that's probably something we'll watch. That will probably be difficult to maintain, I think.
Xi Jinping Vice Chairman and President Brian Gu there speaking with Bloomberg's Yvonne Mann. Now, coming up, Bloomberg has learned that Russian government hackers breached the computer systems of the Republican National Committee last week. The GOP and Russia deny this. All of the details next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's take a look at some of the events we're watching today. At 10 a.m. London time, the European Commission will release its summer economic forecasts. Then over in the U.S., analysts will be closely watching the job openings and labor turnover survey report. That's at 3 p.m. London time. At 7 p.m., we'll be getting the latest FOMC minutes. We'll get, of course, more color on the change in projections, but really finally, the most important story of the day, even if you're a trader, is the Euro's second semi-final. It kicks off at 8 p.m. tonight. The winner of England versus Denmark will join Italy in the final. So expect all of England to have a massive hangover tomorrow. Now, a couple of facts and figures about tonight's match from the British Beer and Pub Association. I mean, we like sight and scope at Bloomberg, so we never let you go without telling you why we think everyone's going to be hungover. England fans are expected to buy more than 50,000 pints a minute during tonight's semi-final. That equates to around 6.8 million drinks over the 90-minute match. If England beats Denmark, they'll reach their first final of a knockout tournament since 1966. I actually have a really funny story about asking for more drinks for a wedding in Italy where they were like shocked that the Brits would drink so much. Now, to one of our top stories, and Bloomberg's been told that the Russian government hackers breached the computer of systems of the Republican National Committee last week. Sources say that they were part of a group known as Cozy Bear, which has been tied to the Kremlin's Foreign Intelligence Service. A RNC spokesman denied the system were breached. Well, joining us now is Bloomberg's reporter Bruce Einhorn. Bruce, what do we actually know about the breach of the RNC?
So we know, according to two people familiar with the matter, that this breach took place last week. As you said, it was by hackers who are part of this group called Cozy Bear, which is tied to Russian foreign intelligence. This is the same group that was behind the 2016 hacking of the Democratic National Committee, and then more recently behind the big SolarWinds attack that took place last year that we found out about in December. The Republican National Committee has said that there was no hack. The Russian embassy in Washington has also issued a statement denying this, saying that there's no evidence of this. This takes place at a time when there is other hacking going on. So there's a lot of activity coming from Russia, we think, when it comes to breaches of security.
Bruce, thank you so much. Bruce Einhorn there, of course, on this ransomware. Bloomberg Surveillance Early Edition continues in the next hour. This is Bloomberg.
Clearly, I don't even think the Chinese have been trying to hide the ball. They want control over just about every financial transaction and corporate move in the country.
The regulatory environment is becoming more and more focused on the softer side now, the data side, the privacy side, the national security side.
The administration has been focused much more on China than on any other foreign policy issue. They haven't quite put together a comprehensive or coherent policy.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. here in London, 11 a.m. Berlin, 5 a.m. in New York, 5 p.m. in Hong Kong on this Wednesday, July the 7th. Our top stories today. Closing the loophole, China plan rules changes that could prevent the country's giant tech companies from listing shares in the U.S. Nomura pulls back. The Japanese brokerage boasts its of global ambitions, but now it's scrapping the plug on a chunk of its hedge fund business. And the rich get richer. Jeff Bezos' fortune hits a record $211 billion after Amazon wins a share of a lucrative cloud computing contract from the Pentagon. Well, good morning. I'm Francine Lacqua with Matt Miller and Danny Berger. Kailey Leinz is off today. Now, we begin with some breaking news from the European Commission. Don't mention the football. Not yet, Matt and Danny. I know I want to talk about it, but I've been told I'm gloating. So I'll focus on the Commission actually lifting its 2021 euro area growth forecast to 4.8% from 4.3% earlier. And I think inflation is also a little bit more than expected. So we were expecting, or they were expecting it to be at 1.3. It's now at 1.9. Matt, we're not talking about football yet, but there was a repricing in treasuries.
I will also point out that
I will talk about
Amazon hasn't. I'm not sure Amazon has actually won this contract, with the Pentagon. I don't think it's been officially awarded. This is, I think, one of the most interesting stories, Francine, of the day.
Yeah.
It's just that the Pentagon is now going to consider Amazon as well as Microsoft.
Yeah, I think the story and our reporting made it very clear, Matt, that actually they were looking at, instead of just giving it because of legal wranglings between the two companies, probably split it and give it to both of them.
Right. Well, it's a different contract now. That was the JEDI contract. Now we're talking about JWCC. The technology has changed so much in 3.5 years that they're going to open it up. They say that's the reason. And they're also going to let IBM, Oracle, and others bid, but it just looks like Amazon and Microsoft are the only ones big enough. Fascinating story. We're going to get to it. I'm pretty pumped about that. In terms of the markets in Asia, that's also been hit by the other really fascinating story this morning, and that is China. Making it more difficult for companies with offshore units to IPO. You can see that we've got a mixed picture in terms of what stocks are doing right now in Asia, and the MSCI Asia Pacific Index isn't moving so much to the downside. You can see it's down about 0.4%. But those two stocks are the biggest losers on the index, Alibaba and Tencent. It's the tech crackdown that's really hitting Asian markets. I threw in whole milk futures there, down 2.9, almost 3%, 3 standard deviation move away from the 30-day average, but also because I feel like I need a little bit of milk today after yesterday's football match. I now understand why Europeans watch this game. It's because you can drink so much during these matches, right? They consume a lot of alcohol while watching. Doesn't matter if they don't score very much. It just means another cocktail, right, Danny?
For some reason, the idea of beer and milk together just sounds so gross to me. I realize you're not drinking both of them at the same time, Matt, but for some reason that's
Danny,
a little off-putting to me.
Did Matt say cocktails and football?
Yeah, wait, what, Matt? Are you drinking, what are you drinking, White Russians? What are you having watching
football?
football?
The adult beverage of my choice, and I just feel like I need to counterbalance it the next day with wholesome milk. Milk makes me think of mom, you know, being a kid growing up. I need to get back to my pure roots. In any case, what do you got? What's going on in European markets?
All right. Well, European markets, look, we did have that European Commission come out and upgrading their growth forecast. It does look like a really strong day here on the European continent and in the UK as well, in Eastern Europe. They are warning about inflation risk, but again, that doesn't seem to really dent any of the rally we're seeing. I mean, I don't think anyone believes that the ECB is going to be tightening sooner than the Fed, but some of the standouts, you have the DAX up 0.7%. You have the CAC 40 up 0.3%. Spain is actually a touch weaker today, but it really is the technology, the kind of momentum stocks that are standing out in today's trading session. So that means for the entirety of the index, we're seeing a gain of 0.5%. Yesterday was a gain of 0.5%. So we're continuing to build on some of these gains despite the negative session in the U.S. yesterday. A euro, which is slightly stronger versus the dollar at 1.18. And looking at what's happening in the U.S., we continue to get this buying of bonds. The bond market is absolutely on fire right now. You have 30-year yields below 2%. You have 10-year yields at one spot, 34.47. So that is also at its lowest in quite some time, since February or thereabouts. I was talking to Andy Brenner from that alliance last night, who said pensions are buying the long end of the curve like hotcakes. We had that ISM data that fueled these concerns about growth. I mean, this is a very different market from a couple weeks ago that was worried about inflation and what the Fed might do with it. At the same time, we do have oil moving higher. We're above $74 a barrel. But of course, the U.S. and the White House saying that they're encouraged by talks going on, Francine, in the Middle East. Of course, they don't want gasoline more expensive. They want everyone to go out in their F1 trucks, F-150 trucks, go buy gas, and just not have to worry about the price.
Yeah, 100%. I'm distracted because of the final. I'm sorry, Danny. I do care about the oil price, and I know you forecasts are also really interesting, and it's moving treasuries. But Leanne Gerrans this morning also gave me this amazing fact, which goes back to the fact that, you know, Denmark is playing England today, fine. Right. Italy's in the final. Okay, look at this. England fans, Danny, are expected to buy more than 50,000 pints a minute during tonight's semifinal.
A minute?
I mean, okay. This concerns me because I come into the office at about 3 a.m., Francine. I guarantee you that I'm going to see a lot of those fans who have bought the collective 50,000 pints a minute. And I'm kind of scared.
I mean,
I'm a little bit scared.
It's 6.8 million drinks during the match. And I guess that's not counting extra time and penalties if they go to that.
Not a lot of milk being drunk, I'm assuming.
No, the next day. The next day.
Yeah, you have to do it before. All right, I'm saving us and looking at what's ahead today as well, apart from the big match this afternoon or this evening. 10 a.m. New York time, the job openings and labor turnover survey report. It will show the number of available positions in May. 2 p.m. we'll be getting the minutes from the FOMC's June meeting. Finally, the Euros second semi-final kicks off at 8 p.m. tonight. The winner of England versus Denmark will join Italy in the final. Whatever you do, do not talk about football with our Maria Tadeo. So let's get to our breaking news out of the European Commission. Officials markedly raised their outlook for the euro area economy, said there's a higher risk of inflation taking hold. So with the very latest is our Maria. Maria, first of all, I'm really sorry Spain didn't make it to the final, but actually forecasts at least are looking better for the EU.
Francine, you're making my job so difficult this morning. I honestly, I feel like I want to go. But look, let's just speak to the data here. So essentially, yes, Francine, they're increasing their forecast for the European economy from 4.3 to 4.8. They're also increasing the inflation outlook to 1.9 this year. So that's very close to the European Central Bank's 2, but below close to 2%. And if you look at the individual countries, yes, you're correct, Francine. Spain will actually see the biggest rebound in the whole of the European Union. They predict an increase of 6.2%, 6.3% this year. That would be followed by France with an economy that should be jumping about 6%, and then followed by Italy. Of course, a lot of this, Francine, is driven by the fact that we're reopening across Europe. We're seeing those restrictions come to an end, especially heading into the summer. So that's been very good for the service industry and the service economy in Europe. However, the Commission does say that while the risks are now broadly balanced, there is still a risk pegged to coronavirus, the Delta variant, and a potential wave when we get back from the summer holidays. Remember, that's what happened last year in Europe, and we did see those restrictions kick back in September.
All right, Maria Tadeo. Spain was the better team last night. I mean, for anyone who watched the game, obviously Spain played a better game and then just lost in penalties, right?
Listen, we have to put this to rest. Spain did play the better game. When you go to penalties, it's not about skill, it's luck. And I have to say, I like my team when we win and when we lose.
I was in tears. Maria Tadeo from Brussels talking to us about, I think it was some economic. It was an economic report of sorts. In any case, thank you, Maria. Let's get to the China story now. Regulators planning to change some of the rules that have previously allowed Chinese companies to lift overseas. This would make that much more difficult. It would be the case even if the unit of the company selling shares is incorporated outside of China. And this is one of the loopholes that big companies have used. Let's get to John Liu. He's our executive editor for Greater China. So, John, this really cements the crackdown on really big tech companies that we've seen out of Beijing.
So this is really a sign of Beijing reaching further than they have in the past. And you mentioned, big companies like Alibaba. What they did before was they would set up a unit offshore in the Cayman Islands and the British Virgin Islands, and then they would list that unit. And because that unit was incorporated outside of China, the regulators in Beijing had no way to exert their influence or control over that listing. So for the example of Didi over the past week, we've had reporting this week that Chinese regulators suggested to Didi as much as 3 months ago that they should not list, that they should delay that listing. But Didi went ahead and listed. And so I think you can see why Beijing would be keen to be able to exert that influence, to be able to have that control over these companies and when they can actually do a listing.
What exactly does it mean for future listings? So do they just need to get approval, or will they go elsewhere than the U.S.?
So under this proposed change, any company that wants to list in the U.S., for example, would have to first show Chinese regulators that they meet all the requirements that Beijing has for that company. So for example, in the Didi scenario, Didi would have had to show Chinese regulators that they were adequately enough protecting their data. So all this data that Didi has about where people travel day in and day out, making sure that that was secure.
John, thanks for staying on top of this for us. That's John Liu, our executive editor for Greater China. Now, after pushing ahead with its global ambitions, despite the fallout from the Archegos scandal, Japan's Nomura is suddenly pulling back. Let's get the scoop from Bloomberg banking reporter Steve Ahrens. Stephen, so exactly what parts of the business is Nomura cutting here? Because it's not the entirety of the prime brokerage, is it?
That's right. It's not the entirety. They're shuttering cash prime brokerage in the U.S. and in Europe. So that's an important part, clearly, but it's not all of it. And also, keep in mind what we wrote in the story, it's not a big part of the global markets business overall. But still, they had the ambition to grow that part of the business. They wanted to get bigger. They wanted to catch up with the rivals in the U.S. and also in Europe. And that plan seems to be at least partly obsolete. And that's an important development for Nomura and its global ambitions.
Steve, talk to me about Wise. So it's not an IPO, but actually it's listing in London, and it could be, you know, if they get this right, it could be like a future path for other big companies.
Yeah, I guess so. I mean, it's a tantalizing even event if they get this right. As you said, it's a direct listing, which means they're selling this without investment banks, without any professional underwriters who say, we'll back you up. If, you know, we don't have enough demand for this, then we'll buy this from you we're taking on the risk, essentially. This is not happening with Wise. They're saying we're doing this on our own and we'll have enough buyers and we'll let complete free market forces set the price. We'll see how it plays out. I mean, if this happens, if there's enough demand, if London as a venue can show there's enough investors to buy this kind of stuff from the shares in Wise, a fintech company, then yeah, it would be a big a boost for the ambitions of London to become a platform for more IPOs, for more listings of fintech companies.
Well, I'm certain they're trying to erase the memory of that Deliveroo IPO, which did pretty poorly. Stephen, thank you so much. That's Stephen Ahrens. Now, I want to look at some of the stocks that are on the move this morning, starting with what John was talking to us about, and that's, of course, the China crackdown on U.S.-listed IPOs. Didi continues another day of falling about 4%. Really fascinating story out of our investing team from Hema Parmar talking about all of the hedge funds that own Didi, that invested in Didi, Tiger Global, as far back as 2014. So if you thought Wall Street bets had it out for the hedge funds, they had another thing coming with this crackdown, certainly experienced some losses there. Another stock for you that, again, is part of this China crackdown is Full Truck Alliance, down another 14%. Again, another stock below its IPO price. Finally, another stock that is a Chinese company listed in the U.S., and I don't understand the price moves. Matt, I tried to talk to you about this one yesterday, and you don't care about hip-hop. So instead, Francine, I think maybe you're into, yeah, exactly. So they do like kind of hip hop dance festivals, that sort of thing in China. For some reason, this stock fell yesterday, again, because it's part of this whole issue of Chinese stocks listed in the US, but for some reason, it's up 27% pre-market. I can't quite wrap my head around why, because everything else is falling quite significantly. That's a Chinese company listed in the U.S. Maybe everybody else, unlike Matt Miller, likes hip-hop. I don't know.
Yeah, you and I are into K-pop. I mean, we're just so cool. Matt Miller, the boomer. I'll pay for that. But there you go. I've said it live on TV. Up next, Seema Shah, Principal Global Investors Chief Strategist. We'll talk, of course, about treasuries. We'll talk about Fed minutes. This is Bloomberg. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua with Matt Miller and Danny Berger. Kailey Leinz is off this week. Now, joining us to talk about the markets, treasuries, maybe a bit of football, Seema Shah, Principal Global Investors Chief Strategist. Seema, thank you so much for joining us. Let me actually start off with what we heard from the EU, which is a raising of the forecast for both inflation and growth. Does it make the EU stocks or EU assets more attractive?
Well, I think they've already had a pretty good run up to here. So we're getting to that point where they're going to also hit that peak acceleration. You know, it was interesting. We saw Spain, Italy doing better, which is exactly what we'd expect. They were the ones to reopen a little bit latest. It is interesting, though, that because that Delta variant, if it does continue to restrict tourism, those are the countries which are unfortunately going to be hit the worst. So we do need to keep a close eye on that one.
In terms of, Danny Berger put together a chart today just showing the Bloomberg U.S. Surprise Index, and it's at the lowest point that it's been, I don't know, in like a year. Are we over the hill now? I mean, is everything priced in terms of the growth and the rebound?
Look, I think it's fair to say that at least in the US, we probably have hit peak recovery. You're less likely to get these kind of upside surprises. But keep in mind also that they're resting at very, very high levels now. This is a strong recovery. Fundamentals are good. We should see that play out in earnings season, both Q2 and of course in Q3. And that should be a good, solid base for equities to continue to perform well. Of course, not as well as we've clearly experienced over the last 12 months, though.
Well, first off, I'm very flattered Matt has decided to pull up my chart. I like that one as well. But Seema, if you look at what's happening in the bond market, you have a 10-year nominal yield below 1.35. You have a 30-year yield below 2%. Is that only just pricing that we're past the peak of growth, or is it saying something more sinister to you?
Well, the way that I look at it is I think there's a lot of technicals at play with bond yields at the moment, but also I think it's a lot more about the Fed and concerns that the Fed has missed out one opportunity to get inflation above that 2% to a healthier level. And I think that's what the market is really worried about. And that's the fundamental driver. But I think the growth prospects are still strong. And that, at some point should once again overwhelm anything else. And we should see a continued, or at least a reverted rise in bond yields through the rest of the year at some point.
Seema, I feel like the market is not really that worried about inflation anymore for no real reason, and that's happened in the last 10 days or so. Is there too much groupthink?
Well, I think, we also believe that inflation is going to be transitory. Supply shortages should eventually start to ebb away. Inflation expectations at the moment certainly not a bit of a concern. But of course, there is a lot of upside risk to inflation. We could see these supply shortages continue for that much longer. And the one thing for us to keep an eye on is whether or not companies are going to be passing on these higher costs to consumers. If they are, then we're looking at a stickier inflation. And then given, as you said, that markets have started to be less concerned, that would be a very negative surprise and something that would, of course, weigh on risk markets.
Seema, thank you so much. Seema Shah, their Principal Global Investors Chief Strategist, joining us with wisdom, as always. Now, coming up, we'll speak with the former Federal Reserve Vice Chair, Alan Blinder, ahead of the release of today's FOMC minutes. That interview, 12 p.m. in New York, 5 p.m. in London, and this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Matt Miller and Danny Berger. Kailey Leinz is off today. Now let's get straight to the Bloomberg. First word news on Hurricane Elsa has now weakened to a tropical storm in the Gulf of Mexico. It's expected to make landfall today north of Tampa. The storm's top winds reached 70 miles an hour. The concern is that Elsa could push a dangerous storm surge into Tampa Bay, raising ocean levels up to 5 feet. President Biden will take on the rapidly growing threat of ransomware against companies and local institutions. Now, over the weekend, there was a ransomware attack blamed on Russian hackers that affected more than 1,000 businesses, with victims in at least 17 countries. The president will meet with agency leaders today to discuss administration strategy. The White House calls it a national security priority. And in New York City, former police officer Eric Adams has won the Democratic mayoral primary. That makes a Brooklyn borough president the overwhelmingly favorite to be elected mayor in November. Well, Adams held off former sanitation commissioner Catherine Garcia by 1 percentage point in the ranked choice voting. Now, coming up next, we'll speak with Dirk Albersmeier, JPMorgan Co-Head of Global M&A. We'll talk about M&A. We'll talk about what's in the pipeline. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Matt Miller and Danny Berger. Kailey Leinz is off today. Matt, I know we look at the Treasury move we saw yesterday. There was really some pretty interesting stories out there in terms of ransomware. And then the other one is the Fed minutes a little bit later on.
Yeah, I mean, the Fed minutes will be interesting to see how the Treasury market reacts to that, because we were down to, I think, 133. Right now we're at 134.64 on the 10-year. It's just pretty amazing that we're in a situation where the Fed is talking about tapering and investors are piling in to government debt. Usually you'd think it would go the other way. Maybe they've done something incredibly right this time, but no one has been able so far to explain to me why we continue to fall lower and lower on treasuries as the Fed gets more hawkish.
No, but I guess you keep on trying. You know, that this is, I guess, the concern. It's, you know, people are starting to worry whether it's groupthink, because there's not one specific fundamental thing that it's actually driving markets either way. Danny, how's it playing out in the markets?
Well, one explanation I have heard, again, I mentioned him earlier, but Andy Brenner over at Nat Alliance, who really focuses on the bond market, says that what it's doing is it's pricing in concern about growth from 6 to 12 months from here on out. And we continue to see that buying in bond markets today. In fact, it is a day where people are just buying absolutely everything. I mean, complete green on my board, be it the 10-year, be it S&P futures, NASDAQ futures, Brent, even after the U.S. hinting that we're going to perhaps get a deal. JPMorgan thinks we're going to get a deal out of OPEC as well. But one of the things that's interesting to look through all of this is the degree to which lower yields and higher tech has become increasingly linked together. You have a NASDAQ 100 futures that's up nearly 0.5%. People are moving into these growth stocks. Again, if it's like Brenner says, and the concern here is about growth, you maybe don't want to be buying value, and you want to be buying NASDAQ futures. So that compares to a 0.2% gain when it comes to S&P futures. Now, the other big cross current when it comes to tech is, of course, what's happening with China cracking down on U.S. IPOs of Chinese companies. So you have DD moving lower by more than 3.5%. Elsewhere, though, energy doing better today. One of the best performing sectors when it comes to these sector ETFs, with oil doing better, copper doing better. So that's the one pocket today where we're starting to see that more cyclical trade come through after it was hammered yesterday. And finally, I guess I have CPOP on here again. I just still can't get over it. So those shares up about 27%. Again, this is another China listed company that is doing better despite the destruction elsewhere. Fran?
Yeah, I love that story. I mean, I'm all about hip hop. Now, tech and media moguls have descended on Sun Valley, Idaho, for the annual Allen & Co. conference. The gathering has spurred deal-making in the past, and all focus, of course, is on any M&A action. Discovery Chief Executive David Zaslav spoke to reporters as he arrived. He said media consolidation will only accelerate, and got into the timeline for his company's acquisition of AT&T's film and TV businesses.
We've gotten a positive reaction so far. So we're hoping that it'll be another 8 months. Could be longer than that, but things are going well. AT&T team's working hard. Our team is working hard. So very exciting bringing these two companies together. We have a strategy that we've developed, and now we'll see how HBO Max does and HBO over the next year, how we do with Discovery Plus, and we'll see if we can come up with something, some best practice.
There you go, the Discovery Chief Executive rocking the sunglasses. Now, let's get into the outlook for deal-making with the JPMorgan Global Co-Head of M&A. He's Dirk Albersmeier. JPMorgan advised on that Discovery Warner Media deal. Dirk, as always, thank you so much for coming on. How much more do you have in the pipeline? So how much M&A are you expecting to pick up in the next 12 months?
Look, obviously, we had an amazing start with over $3 trillion of announced transactions, but there's really no sign of slowing. And when you look at it, like, the world came out of COVID in a very synchronized way. And what we are now really seeing is that while I think all the kind of trends of the first half continue, on top, we can travel again. It clearly helps with deal making. We're now moving into a kind of hybrid world where we continue to use the benefits of like the internet and the virtual kind of world, while like having more physical meetings, and it matters. I think that all of that makes us very comfortable that like the kind of strong kind of first half will continue. Now, that won't last forever, that's clear, but at this point, there are really no signs of slowing.
Dirk, what does that mean for, are we actually expecting very big deals? And are these big deals, are they going to be cross-border? Or do you see, you know, because of COVID and recessionary concerns, a lot of governments being much more inward-looking and blocking some cross-border?
Look, as I said, it's really above all like industries, and cross-border hasn't been the main driver. But we've seen like more mega deals coming back. But more importantly, really like sponsors have been a major kind of driver in the first half. Usually about 25% of M&A is sponsor driven. At the moment, we have like about 38. That's substantially up from like what we've seen in the past. They have enormous firepower. They're seen as a very attractive kind of buyer group. And most importantly, they're doing ever bigger deals. And we look at the Medline transaction, it clearly reset the kind of art of the possible. But historically, people saw like 10 billion as the maximum they could do in terms of a single equity check. Now we are seeing people being able to put together consortia that easily can do $15 billion equity. And that means while so far the focus has been on the P2P side more on the kind of 1 to 5 billion, we are seeing sponsors now moving to 10 to 20 billion. And when you look at the Europe, UK clearly is at the forefront. While we had like 4 P2Ps last year, we already have seen 9 in the first half. So I think all of that makes us very comfortable that like kind of strong pace we've seen in the first 6 months will continue into the second half.
Do you see, Dirk, financing through cash, through equity, through debt? What's the trend right now?
No real change. So cash remains like the currency of choice. Clearly, like people have like attractive stock to offer, but at the same time, with like strong kind of earnings momentum, most of the deals are still done in cash. For some of the larger deals, we are seeing more stock, but overall, cash remains a kind of preferred currency, and I don't think that will change.
Well, I'm curious to know how you view the SPAC phenomenon that we watched. I mean, obviously, we had what some people would call a bubble, but that was just gathering the cash, right? Now those SPACs are putting it to work in deals. How should we expect it to work out?
No, look, that's an interesting question. We clearly saw like a rush in the first half, and like by now we have about 140 announced SPAC mergers that haven't closed, that are about to close in the next 90 days. I think that's going to be important because so far about 40 billion of pipe capital is linked to these deals, and investors are somewhat reluctant to commit additional capital until these deals effectively are happening and people see how it trades. I think the good news is deals are closing, and when you look at the deals that have closed, about 80, 2/3 of them are trading nicely with an average 15% up. So what we expect is clearly that there's a bit of a digestion now, that over the summer that will work itself through, and then in the second half, post-summer, we will see more kind of M&A. Don't forget, there's still over 400 companies or SPACs out there looking for targets, but clearly the pace that we saw in the first quarter wasn't sustainable, and what we now believe is that this market will mature quickly and clearly will become an important part of the M&A market, but in a kind of more manageable size.
Speaking of looking for targets, how much of what we're seeing come out of the private equity space and their desire to find targets is from pressure from investors after having built up record amounts of dry powder?
Well, look, clearly the activism bit is an important question you're raising here. We've seen like campaigns going up 50%, and like what happened, I think post-COVID, people were really like now looking at their strategy again, asking themselves, what is really the kind of core business and what are the areas where we might not be able to compete? And that's exactly where the activist goes in. And people try to be proactive. They try to effectively avoid being like the subject of an attack. And that's why like non-core divestitures and kind of carve-outs will play like a very important part in the second half, with more companies really like realizing that in a post-COVID world, being focused, growing fast within your core kind of business is more important than being widely spread over like different divisions.
Dirk, talk to me a little bit about the SPAC rally. Is it here to stay? And actually, what are you expecting for the second half of the year?
Look, the SPAC rally, as I said before, clearly at the moment it's slow. We will see in Europe, what I think may be interesting is out of the kind of 140 SPAC mergers we have seen year to date, 23 had a European target. So that's still a small amount, but clearly like a number that will increase. So I think SPACs make a lot of sense for certain companies. And I think on that part, it will continue. But we won't be able to find like maybe enough good targets for all the SPACs currently out there looking for like targets to bring to the market.
Dirk, thanks so much. Dirk Albersmeier, JPMorgan Global Co-Head of M&A. Now coming up, Russia's latest cyber attack, how a group known as Cozy Bear breached the computer systems of the Republican National Committee. That's coming up next, and this is Bloomberg. This is Bloomberg Surveillance Early Edition, and you're looking at live at the Principal Room. Coming up later today, Goldman Sachs Senior Investment Strategist Abby Joseph-Cohen. You don't want to miss that interview. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Matt Miller and Danny Berger. Kailey Leinz is off today. Now, Bloomberg has learned that the Russian government hackers broke into the computer systems of the Republican National Committee last week. It took place around the time a Russia-linked criminal group unleashed a massive ransomware attack. Now, Republican Party officials say there's no indication any information was stolen. Now, joining us for more on this is Rosalind Matheson, Bloomberg Executive Editor for International Government. Ros, this is a Bloomberg scoop. It's a massive deal. Thank you so much for joining us. What does it actually mean for relations between the U.S. and Russia?
Well, of course, it comes after a series of ransomware attacks in recent weeks, some of which have targeted quite important U.S. infrastructure. And, of course, the President, Joe Biden, went to Geneva to meet with the Russian president and gave him a list of 16 critical infrastructure areas that he said should not be touched. And he came out of that summit and he said, I spoke very sternly to the Russian president and I told him absolutely that these cyber attacks that are being conducted by actors on Russian soil need to be stopped and you need to rein them in. And of course, they've not been reined in and they're continuing. And so the latest revelation in our story that, of course, it's now extended to breaching the computers of the Republican National Convention, the RNC, last week is going to put further pressure on Biden after that summit to show that he's actually come away with something from that meeting and that he's not being pressured by Putin.
How difficult is, by the way, we should mention that Russia has denied this. So this is a report from Bloomberg, but Russia has said they had nothing to do with the cyber attacks. How difficult is it, Roz, to separate the Russian government from groups related to the Russian government from criminals that are operating on Russian soil? I mean, what is this exactly? Is it Cozy Bear or is it Moscow?
Well, this one seems to have been Cozy Bear, which is seen as a government outfit. And that, as you say, there are different groups there. There are criminal groups that are operating on Russian soil, utilising their base there to make attacks around the world. And then, of course, then there are ones that are really sort of linked very strongly to the Kremlin. Either way, though, the U.S. administration's view and others is that, well, these groups would not be operating on Russian soil without some sort of tacit permission or understanding from the authorities there. And certainly the Russian government hasn't shown a great interest in trying to crack down on their activities. So while there are those degrees of which different actors involved in this, and some are acting purely, it seems, for monetary gain, the problem that countries like the US have is that there's no visible effort by Moscow to curb their activities.
And also, of course, following the news out of the Pentagon that they've scrapped their deal with Microsoft, looks like they might split it with Amazon. Do we know what the driver is behind this, why they're reconsidering the contract?
Well, that's right. This contract has been mired in difficulty since 2019 when it was first given. Of course, it's a lot of money, $10 billion, and the idea is to unify all the Pentagon operations, including highly classified information, under one cloud operation to make it much more efficient on the battlefield. But because it's been drawn out in legal controversy, the allegations that the former president, Donald Trump, put undue influence on the outcome, the Pentagon's decided to scrap it and start again. And their argument, of course, is that 4 years later is a long time in technology. And so, in fact, what they were looking for back then from a cloud is different from what they're looking for now. And it makes sense to be more nimble and to renew it. But, of course, there was also the reality that this was going to stay caught up in litigation potentially for years to come. And it's really a message from the Pentagon. They want to get past that now and just move on.
Thank you so much. Our Bloomberg, of course, Rosalind Matheson, looking at all governments around the world. Now, later today, we speak exclusively with the Russian ambassador to the U.S. He's Anatoly Antonov. That's at 12 p.m. in New York, 5 p.m. in London. I know the other story, of course, that we've really wanted to talk about is Jeff Bezos. Matt, I know when we came in, you were all over the story, and it's, of course, related to the Pentagon and the awarding potentially of something that they used to give to Microsoft, both Amazon and Microsoft.
Exactly. As Roz was just saying, this has a lot to do with the Jedi cloud contract that the Pentagon initially awarded to Microsoft solely. And now it's been scrapped. There's a new big, could be multi-billion-dollar contract that could go to Microsoft and Amazon. Of course, there are other competitors, but this boosted Amazon stock yesterday. Now Jeff Bezos is worth $211 billion, more money than any man, woman, or child has ever had. So he's not just the richest man right now, he's the richest man of all time. And it's, to me, doubly fascinating because this is even after he split a portion of his wealth off to his ex-wife, Mackenzie. So if they were still together,
he's rich.
You have to imagine he'd be closer to 300.
Can I also point out that, of course, Mackenzie Scott's wealth increased because of this as well. It increased $2.9 billion. She's given away $2.7 billion this year. The billionaires here literally can't give money faster away than they're getting it.
I saw that line as well, but I don't think that's exactly true. She could give all of it to me in one fell swoop. They could give away money very quickly. Have you seen Brewster's Millions?
And Matt, sorry, wait, what are you doing with the millions? No. First of all, I mean, I find it incredible that, 4% gain in Amazon means that Jeff Bezos was $8.9 billion richer. But, okay, so you get $200 billion. Matt, what do you do with it? Invest in treasuries, perhaps.
I have no idea. I would ask a lot of the smart people that we have on this program what to do and trust them with the money.
Right, there you go. $200 billion, where'd you put it? The $1 billion question of the week. We'll have plenty more, of course, on that story throughout today. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Matt Miller and Danny Berger. Kailey Leinz is off today. Now, some developing news. Reports are saying that Japan is now considering declaring a new state of emergency in Tokyo, a move, Matt, that would likely mean that the Olympic Games would actually go ahead but would be held without spectators.
Right. I mean, we were pretty much there already in terms of the Olympics. It looked like they weren't going to let anybody in to watch. Most recently, except for VIPs. You got to assume that, competitors, managers and teammates and maybe even family members will still be able to get in and watch. But for the most part, this is going to be an Olympics that you will see solely on television or hear on radio if you still get your news that way, as I do. But definitely not one that everyone's going to go and see.
Yeah, definitely. Tom Keene, a co-anchor of Bloomberg Surveillance, now joins us. Tom, there was a pretty big move actually in treasuries. The U.S. 10-year yield breached 2%. The 10-year was below 1.35, and that was exacerbated by some of the short moves on there, the short squeezes.
The market right now is absolutely extraordinary, Francine. To look back 6 months and think we would be right here is unimaginable. Abby Joseph Cohen will join us from Goldman Sachs. Jim Caron will start us strong here in about 7 minutes with Morgan Stanley. Let's go to the chart. It's real simple, Francine. It's the inflation-adjusted yield, the residual, take the nominal 10-year yield, subtract out inflation guesstimates, and it is the duration, the length that we have had a negative yield. The pink line is a good moving average I use, and it is now down, breaching through to new negative levels. Just extraordinary to see the reversal in yields.
Yeah, and Tom, you have the perfect guest to talk about this.
Well, we do. I mean, Jim Caron's going to join, and that'll be good. And then Abby will come along on the equity markets. The Amazon news yesterday, I can't emphasize enough. The jump condition in Amazon of over 4%, what that does to the NASDAQ 100, with 3 stocks in the NASDAQ 100 making up 30% of the index. I don't believe I've ever said that, Francine. And we'll talk to Abby about being in the markets here at Dow 34,487.
Yeah, what a market day. Tom Keene, co-anchor of Bloomberg Surveillance, starting shortly. Now, this is what else we're watching today.
He can't quote the Dow. Pharaoh's back. Can't quote the Dow when Pharaoh's back, right? Will he allow that?
Right. I don't know. Tom, no. I don't know if Tom is still there to answer that. We'll have to get him on the phone later.
Tom must have gone.
Danny,
he must have gone.
You're watching Fed Minutes.
Yeah, I definitely am. And look, to kind of carry on what Tom was saying, we saw this absolute destruction of short positions on treasuries. And of course, the FOMC minutes come from a dramatic meeting, at least dramatic in terms of the market reaction. So what happens to these positions that so far it seems like the pain trade is still to see lower, to see yields continue to drop? Is that going to continue? Are they going to be hawkish? What does it mean for tapering? I mean, it is a dramatic day, and it could get even more dramatic depending on what we get out of the FOMC, Matt.
Yeah, well, especially as Tom points out, the real yield is down. We breached 1%. You can see it on the Bloomberg if you type USGGT 10Y index. We breached negative 1%. So that'll definitely be one to watch today. I'm watching Cozy Bear and this Russian, the new Russian hacking scandal. I find it absolutely fascinating because the Russian government apparently has an arm called Cozy Bear, which is a great name, regardless of what they do with it. And also the fact that they're able to hack into these, you know, we're on high alert in the U.S. in terms of cybersecurity. Every time you talk to someone who's close to the Pentagon, someone who's close to national security, they talk about cyber. So they're watching. Right. And nonetheless,
but Matt,
the Russians have been able to break through.
Yeah, so one of the things that we were talking about today is that if you have two groups actually attacking different things, so one goes after companies, and so I don't know how it works, but it feels like if you have a two-pronged attack from two different entities, that's maybe where you see the failings. I'm not an expert, but
they're
we are getting
flanking.
the experts
You're
on
saying they flanked the RNC essentially.
Exactly, Matt. This is what I'm watching. What I'm watching is basically Wise. So this is a direct listing. This is one of the most fascinating ways to get into the markets because it's pretty unorthodox. And it's a digital payment provider. So Wise confirmed its plans to go public. It's happening today on the London Stock Exchange. But because it's opted for a direct listing, that will test investors' appetite for this path forward, means that if they succeed, they could have other big companies do the same. I think we'll have more on that in like the next 5-6 minutes. This is Bloomberg.